In their evening watching after an eventful day for the Swiss National Bank. Robert Cinch with us from the Royal Bank of Scotland. What a busy day. Bob Cinch, everyone's surprised by this action. What was the response on your trading floors as the Swiss National Bank acted?
Well, I think there was a little bit of selling of Swiss initially. A lot of people who had long positions on, but interesting as we go through the London close, dollar Swiss almost back down to the lows we saw yesterday.
Dreaded first, let's bring it up. What's next? Well, maybe it's Swiss, but how about this? Robert Cinch considers the gnomes of Tokyo as we see ever stronger Japanese yen right now under 77, 76.87. Bob Cinch, let me ask you what I've asked everyone this morning. Will the Ministry of Finance act overnight?
You know, I think the odds are increasing that they have to take some action, and it's partly about dollar yen coming down toward the lows. We think they probably didn't act earlier in the week as they were waiting to make sure that the debt ceiling impasse got settled. But what you're also seeing, and I think the MOF referenced this last night, is that the yen is now appreciating versus other Asian currencies, yeah. And that really creates a significant strain on them competitively throughout the region.
This shows really the interconnectedness, folks, that we've seen here. Let's bring up the number just to get the scale of the move here. And we've got a couple other terrific charts for you just to bring this into our distorted real world. The number 32% Swiss franc appreciation versus the euro since the crisis began. This has something, Bob Cinch, to do with real economies. How do you transfer over the drama of Washington or the drama of Europe into the real economies? Now we're talking global economic slowdown. Do we blame that on the irresponsibility of various and sundry parties?
Well, I think that that's certainly what's going on in Europe and what went on here in the U.S. does create uncertainty. Uncertainty increases the hurdle rates for making decisions, whether that be business decisions or consumer decisions about spending and investing. So I think that's certainly a cause of concern and sort of temporary, we hope temporary, lack of investment and consumption activity. We'll see what happens after the U.S. Debt ceiling impasse settles down a little bit to see whether that has any positive impact on the U.S. consumer and U.S. businesses.
Let's fold this in here. Earlier this morning on Bloomberg Surveillance, folks, Bloomberg Radio, Sirius and XM, I spoke with Vincent Reinhardt of the American Enterprise Institute, and I asked him to explain why Germany is so willing to transfer their citizens' resources to Greece.
Because of the Euro project, Germany doesn't have a currency that is an exclusive flight to safety. If there was no euro, the DM would be the Swiss franc. They would get the force of appreciation, and monetary policy would be pushed down to the zero bound. Germany is an export-led economy, and those exporters like a weaker currency.
And so there you see some of the interdependency. Or Bob Cinch, Vincent Reinhardt talking about Euro politics. How do we get out of this European mess if we have a single currency?
Well, you basically have two things you can do. You can either reduce the debt burden through writing it down, or the other alternative is growth. And you know, Vincent's wife and good friend Carmen Reinhardt has written that part of the adjustment process after debt crises like this is generally a devaluation of the currency. Now, we are getting a devaluation of the currency, certainly in the U.S., but that's one of Greece's big problems. They can't devalue the currency, nor can Ireland, and so that limits their options. And when you limit your options, things get much more difficult. Everybody needs growth. Growth makes things a lot better. Growth makes it a lot easier to pay down debt. Unfortunately, in the aftermath of debt crises, you generally don't get strong growth.
What does the Royal Bank of Scotland call? There seem to be so many ways to go here. I know Goldman Sachs goes strong euro, many others go weak euro. What does the RBS call?
We're definitely in the weak euro camp. We think that while the ECB will continue to talk a pretty tough game this week, the underlying fundamentals for the ECB policy decision-making process are really beginning to deteriorate. Growth is slowing across the Eurozone, even in Germany, that strong export-led Germany. We're seeing the periphery weaken up, borrowing costs are going up, and we think that by September, the inflation rate in the Eurozone also peaks, and that combination of events leads to the ECB to have to back away from their previous hawkish rhetoric.
I thought, Bob, the distinction in the statement by SMB this morning was to talk about the real economy of Switzerland really being difficult. Here's a chart, folks. Thank you for your mail on this chart. This is trade-weighted Swiss franc. You can see the very orderly trend before the crisis, and we're way out past 10 standard deviations. That is my greatest distortion out there. That's a remarkable chart showing how distorted the European system is. Bob Sinch, is the U.S. economy any less distorted after what we've seen this weekend and after the new economic data we received?
Well, first things, Tom, if you look at that trade-weighted Swiss, it actually looks a lot like the price of gold, and those are probably related events. But in terms of the global economy, I think it continues to be distorted, partly by disequilibrium in global exchange rates, particularly in Asia, and that creates a whole bunch of other disequilibrium factors in the system.
That's what I wanted to get to, this idea of it really knocks on. Bob Sinch mentioning gold. We spoke to him earlier. That's not the chart I want. I'm sorry. I've got the wrong chart there. I wanted Elegant 2. Excuse me. I don't know. Did we get that up today? They're getting it up right now. That's it. The rec sets to the rec. That was my mistake, folks. I told him, give me gold. There's gold right there. Real gold, the Gilded Age, and you can see it explode up. The correlation of gold to the Swiss franc is remarkable. Who's leading who here, Bob? Is it Swiss franc leading gold, or is gold leading Swiss franc?
Oh, I think it's a joint partnership. You know, I think what it is major central banks around the world looking for alternatives. First, they're looking for alternative to the dollar. Now they're looking for an alternative to the dollar and the euro. And it leads capital flows to really overwhelm trade flows and overwhelm economies. You have massive capital inflows into a small open economy like Switzerland. And that's really creates problems, and I think that's what the Swiss National Bank is beginning to harp on now, is that this really is creating structural problems for the Swiss economy going forward for potentially years to come.
I know you don't do equity strategy, but we're seeing this knock over into the United States equity markets. All of these markets are really closely intertwined. How are the currency markets a signal for equity investors?
Well, I think when you're seeing a flight of capital from the big currencies and the big countries into alternatives, it really suggests that there's a lot of uncertainty, unease with the global environment. People are looking for safe havens. You know, traditionally equities are not a great safe haven.
Okay, well, let's use an op-ed. We're going to come back with Bob Sinch. So much to talk about SMB in Japan and, of course, the American economy and jobs. We'll have our Friday 12 noon jobs show for you this week. A real in-depth look at the labor economy. Op-ed, Rogoff, Project Syndicate. History suggests that recessions are renamed when the smoke clears. Perhaps the smoke will clear if we dump Great Recession and replace it with something more apt like Great Contraction. We're going to come back with Bob Sinch and talk about Ken Rogoff's Great Contraction. Surveillance midday, we're down 123 points. Add up the days, it really begins to add up. Surveillance midday. Let's get caught up on some other top stories this hour. Lisa Murphy here with Street News.
Thanks so much, Tom. Well, we turn first to Europe, where Societe Generale says it may miss its earnings target for next year. France's second largest bank also reported that its profits fell 31% in the last quarter because of a write-down of Greek government debt. Well, shares of the bank plunged to their lowest level in more than 2 years following the news. And the UK bank Northern Rock says it expects to post a profit in the second half of 2012. The was due to Saxon. Morgan Stanley is hoping to reach a deal by the end of the year. Back to you, Tom.
Lisa, thanks so much. Folks, what's the chart I really use? People email me and they say, okay, forget about the TV charts. What's the real chart? Here's a chart of the Dow. Victor, come on over here and look. And it's a little bit, that's clear. I like that. These are candlesticks. I call them candle pins. which is what my kids called them. This is parabolic SAR, some moving averages, and this is a 2-deviation band. But this is the Dow breaking down now down 136 points. That's the actual charts we use here when we're trying to analyze the market and analyze currencies. We're with Bob Cinch of the Royal Bank of Scotland. And Bob, I thank Lena Komaleva for this chart. Here is the Dow Jones Industrial Average, Bob Cinch, in Swiss francs. Strong Swiss franc means you underperform, and you can see that Dow is a long-term ugly chart if you're in Swiss francs in Switzerland. Bob, this says a lot, again, about the interdependencies, the limitations a strong currency nation has if they want to invest abroad in a troubled banana republic like the United States of America.
Well, absolutely. You know, this is one of the challenges that Swiss investors and Swiss companies face. They are clearly, seeing competitiveness challenges that are unprecedented. We looked at the trade-weighted Swiss franc a little bit before. The trade-weighted Swiss francs, that's against the dollar and the euro and the yen, a few, sterling, is about 40% above its 10-year average. 40%. I mean, that is just a huge competitiveness issue for, again, a small, open economy with a lot of international companies.
Here is the U.S. view of 4-decade weak dollar policy. We've shown this chart many times. Almost needs updating the way we're moving so quickly here. Over on the left side of the chart is the Plaza Accord, and after it, you can't see it, the Louvre Accord. Bob Cinch, do we need another meeting where muckety-mucks get together and try to adjust Swiss franc or adjust Japanese yen or adjust U.S. dollar?
Or adjust Chinese yuan?
Yeah.
I think we've had a couple of those. Again, I think a lot of what's going on is you have a large block of currencies, the Asian currencies, which are not trading in an equilibrium pattern. And so what happens is that creates an enormous buildup of capital flows, reserve flows. Those get diversified, and they exacerbate movements in currencies that aren't restricted. So the poor Swiss, small open economy, a central bank that believes in free markets, is just being overwhelmed by this growth in capital around the world, a lot of it being this reserve growth in Asia that's really taking place because they aren't letting their exchange rates adjust to reflect market forces. And so what you have is big capital buildups that overwhelm small markets, the Swiss franc, gold, and some other commodities.
I totally agree, Bob, but Ken Rogoff, among others, when he was head of economic research at the IMF, wrote about this decades ago. Have we learned anything since the time of Rogoff and Stanley Fischer at the IMF?
Sure, we've learned that they were right. And disequilibrium in markets creates disequilibrium in other markets, and I think that's what we're seeing here. And again, it just concentrates all this global flow of capital into a relatively small number of markets that are allowed to trade freely, and that just creates distortions all over the world. And again, I think the Swiss National Bank is facing one of the most difficult.
Bob Cinch, 20 seconds. Are you under your desk in the bomb shelter, or is there a trade you're actually doing today?
We still think that the Asian currencies perform well. If you look in the G10 space, despite all the risk-off going on, we think the Aussie and New Zealand dollars actually look good against the euro on a medium-term basis.
Very good. Bob Cinch, generous of you to be with us today with the Royal Bank of Scotland. Coming up, Dean Mackey. Boy, has he brought down his economic view. And you can see here, folks, let's bring up Asia DXY right now, that straight-up shot for the Asian currencies. It's surveillance midday. There's Asia DXY.